Now the Indian steel space, the metal space, that's the one that is in focus today, and we're going to tell you all more details on this stock. Let's not forget, China plays an important role in terms of the recovery that we see coming in from there as well. And what has happened actually, the recovery in China has been a bit slower. But how does this work out for our Indian steel players, our metal players as well? That's what is highlighted today in JP Morgan's note, which they've come out with on the steel space specifically. Now, what they're saying is that investor sentiment has actually remained quite bearish on the metal space in general and steel in particular so far. And the key concerns that are there is what? A lack of a meaningful recovery seen in the demand coming from China. Much slower than what was expected. Now, JP Morgan is highlighting that they are expecting a good recovery to start coming in from China in the current year 23. That's the year which is going on right now, Jan to December 2023. They're expecting that the steel demand will particularly start getting better. Chinese steel demand actually will start getting better. Now, what they're believing, and what I said in the starting as well, they believe slow recovery was seen so far, mainly likely due to the slow return of recovery seen due to the workforce not coming back as expected in China after the Lunar New Year. They have a 15-day break. So after that, not many people had actually come back to work. Now, in JP Morgan's opinion, if one needs to see a rally, either steel prices have to come down or coking coal prices have to come down. Steel prices have to rise or coking coal prices have to come down in terms of the spread levels to actually start breaking even. And amid this scenario, what they believe is that the Indian steel companies are actually well positioned, given that we are seeing a recovery coming in terms of the demand. Domestic demand that has been strong. So that is a factor that is working out well for these Indian companies. And what will happen is that the Chinese demand will start recovering, the export demand will start recovering. That will obviously work out well for the companies as well when we start going forward. So now in JP Morgan's note, they are positive on an overweight on Tata Steel as well as Steel Authority of India, or as we know it as SAIL. Mainly why? They see that lower institutional ownership that is further adding to that positiveness that they have coming in for both these stocks as well. And that is why they find these stocks attractive in the steel space. So yes, JP Morgan especially is liking in the whole metals basket. They're liking the steel space specifically. And two stocks that they like further are obviously coming in is Tata Steel and Steel Authority of India. So that's the roundup. In turn, obviously, Chinese demand as of now the recovery was as a bit slower, was not expected to be this slow. So that was a bit of a factor coming into concern. But JP Morgan believes that this will start seeing a recovery. Demand will start coming back in the current year. So nothing bad and nothing to worry about. And they like these two stocks, Tata Steel and Steel Authority of India.
If you like this video, then like, share and subscribe to ET Now.